This meeting is being recorded.
All right, hey, welcome back to Principles of Accounting 2. I am still your host, Dr. B, and I am very happy to have all of you with us today. Wow, we have made it to week 4 of our Principles of Accounting 2 class here at UDC in the fall 2024 semester. I want you to think about that for just a second. We're in week 4. This is a 16-week class. We are 25% complete, or 1/4 complete with the course so far. That time went by fast, as it always does, right? So yes, we are in week 4 of our class together, and 25% of the class is now done. 1/4 of the way through the semester so far. And we only in the middle of September. So it goes by fast, it does. So thank you to all of you for your awesome work over the past 3-4 weeks. I couldn't do all this without y'all. You know that. Okay. That means a lot to me. And I'm so happy that you're all doing so well and you getting through it. And I couldn't be happier. I just want to let you know that I'm very, very proud of all of you and the work that you're doing. It means a lot, it does. I know that, we got off to a relatively, some of us got off to a little bit of a late start over the past 4 weeks. So I'm going to say this because it's important. Some of you have slipped a little behind. And, I sent you some messages. I was concerned about you. I'm still a little concerned about some of you. But you're getting caught up, and that's good. Don't slow down, okay? Because we are already in week 4, and it is really, really important that you don't fall behind in this class. Because you already know it's a lot of work involved. And so if you fell behind, I need you to get caught up. You have to. I mentioned this at the very beginning of the course, and I'm going to say it again. If you don't do all the work in this course, it will be very difficult for you to pass. Okay? Very difficult for you to pass if you don't do the work. I'm just saying. Okay? So, please do the work. And as a reminder, all of the discussion boards, you should have your original post done by Thursday and responding to 2 of your classmates by Sunday. Okay? Why? Because it's real difficult to have a conversation if there's only one person that did it on time. Okay? And remember, every discussion board also requires 2 responses to your classmates. And we're not talking like 1-2 words. We're talking like full sentences, yeah? So just keep that in mind. I know it's not like a whole lot of points, but it's still enough to make a difference. So I'm just putting that out there. But again, thank you again for your hard work that you're doing so far. It means a lot to me, and hopefully it means a lot to you, and that you're getting some out of this. If you ever need help with, like, I don't know, trying to get a LinkedIn Learning Certificate completed because it's giving me a hard time with the technical side of things, or maybe you fell behind for whatever unknown reason, reach out to me. Tell me you need help, okay? If you need help, you got to tell me that you need help, because otherwise I'm not going to know. And it's up to you, right? It's up to you to be responsible for your own success or failure, right? This is you, okay? You can't be blaming me for you not doing the work. You can't be responsible for that, okay? I can only help you so much. You got to be able to do the work. So just take it for what it is, and just remember that you can do this. You can do this. I just need you to do it. and you need to do the work. Okay? I'll get off my soapbox. I just wanted to make that very clear. All right. So, as I mentioned, we're a full 25% complete with the course. We're in week 4. So, for those of you who are following along, we are now in job order costing. Last week, I posted the video for managerial concepts, and I'm confident that most of you watched it, or all of you watched it, because I see that you did pretty well on the quiz. That makes me feel good. Hopefully you feel good about that as well. As it mentioned last week, this course is really all about the internal components of running the business, right? And throughout this course, we're going to be talking about this from a manufacturing perspective. We talk about things like raw materials. We talk about direct labor. We talk about factory overhead. These are the things that go into making a product, the costs that go into making a product: raw materials, direct labor, and factory overhead. These are all the costs associated with making a single product. And we're going to talk so much about those things over the next 12 weeks. And so it's really important that you grasp those basic concepts that were discussed last week. So where are we today? We're in week 4. Today we're going to talk about job order costing and the process involved. For and related to this week, under the instructional materials, if you want to follow along with your PowerPoint presentation, that you're going to be able to find that right here under instructional materials. Just under there's a couple of nice kind of definitions and a little related information to what we're going to talk about. And below there are a couple of very short YouTube videos related to the process. You'll find these to be helpful as we're going through. And so that's why I wanted to make sure that you knew where these were. So under the instruction materials for this week, just below there in this week, we have our week 4 discussion board. As I had mentioned, the way to be successful with a discussion board is you want to have your original post completed on Thursday night. Original post completed on Thursday night. And the reason why I want you to do that, number one, is right here. It's in the instructions. But besides you having that original post completed by Thursday night, is it gives you time to respond to 2 of your classmates by Sunday. Okay? So do your best to complete it by Thursday night, please. Please. And also, make sure we're talking full paragraphs, yeah? So first I'd like to start off with that. Wonderful job, Alisa. Wonderful job, Lena. These are excellent, excellent posts. This is exactly the kind of stuff I look for. And then, of course, they'll both respond to 2 of their classmates once the rest of y'all post, right? So, and that'll make for a successful discussion board for this week. And then the other thing related to our discussion on job order costing is going to be your Chapter 19 quiz, which is on job order costing. So those are your 2 action items for this week related to job order costing. And without further ado, let's jump into our discussion on job order costing. I want you to think about this whole course from a manufacturing perspective. In manufacturing, we have costs for labor, materials, and overhead. So think about those things for a second. Materials. Direct materials are the materials it takes to make the majority of a product. So let's take this calculator I have in my hand here for example. This is a Texas Instrument BA2 Plus calculator. It's a financial calculator. It's a product, okay? It's a simple product. It's a calculator, okay? Simple product. What do you think? What kind of materials makes this product? What kind of materials do you think went into making this calculator? Tell me. What do you think? What's this calculator made of? Ashley?
I'll say
A lot of plastic.
a battery.
Plastic, rubber.
I'm sorry, Ty?
Rubber.
Rubber for the buttons, yep. Rubber for the buttons, a lot of plastic, some battery components, internal components. Yeah, that's pretty much it. Some plastic, some rubber, and some components went into making this calculator. That is the raw materials that were used in the manufacturing process to make this calculator. Think about an assembly line and what that looks like, okay? Just visualize it in your mind. This calculator started out as raw materials. Somewhere in a warehouse, they had stacked up a bunch of plastic in one bin. In another bin, they had a bunch of rubber. And in another third bin, they had a bunch of components. Okay? And those are what we call raw materials. They make up the majority of the materials that go into making this calculator. We take those raw materials out and we put it onto the assembly line. Okay? And on the assembly line, we got people and we got machines. And so we got the conveyor belt, we got the raw materials coming out and going into work in process. Work in process is where we make the product. It's work in process. We're making it. We're in the process of making the product. It's work in process. So here I am on the assembly line. We're working on making these calculators with the raw materials. We took it out of raw materials, put it into work in process. It goes down the assembly line. We got people that are putting together these components, the molded plastic, the rubber buttons, and the components. Okay, we got people doing that, plus machines, of course. And as the people are physically touching the product, we call that direct labor. If the people are directly involved in the manufacturing process, we call that direct labor. Okay, so we got raw materials plus the direct labor, work in process. When the calculator is being made, we're adding additional cost to making this calculator. It's the cost of the direct materials, yes. And it's plus the cost of the direct labor, yes. Then we have this thing called factory overhead. Factory overhead is all the other stuff involved in the manufacturing process. The lights for the factory, that's factory overhead. The maintenance for the machines, part of factory overhead. The supervisor's salary, part of factory overhead. The general administrative costs, factory overhead. They're all a part of the manufacturing process, but not directly traced. That's manufacturing overhead. So I got my direct materials plus my direct labor plus my factory overhead. Then the calculator rolls off the assembly line at the end, goes into a box, a package, and then goes out to the as finished goods ready to be shipped out to the customer. Okay? That's how manufacturing works. It's very simple. The reason why I want you to think about that process and think about that flow of product being made, it's because everything in this course that we're talking about is based off of that. Why? Because we need to, as managers of our business, we need to understand all of the costs related to running the business from an internal, a managerial accounting perspective. So that's what we covered last week in a very general sense. Okay. Now here we are this week. We're talking about this concept called job order costing. Now for today, I want you to remember that flow, that physical flow of making things. Okay? And I want you to put it into a different type of context today. For today, I want you to think about the customer and what kind of customer this is. When a customer places an order for a product, we call that a job order. Why? Because the customer's order is very specific. The customer tells us exactly what they want and how much of it they want. Think about a car, for example, an automobile. Let's say you're interested in buying, a Tesla or a Toyota or whatever's, okay? And you say, you know what, I don't want to just walk onto the dealership parking lot and get one. I don't want to do that. I want something I can call my own. I want it custom, okay? I like the leather seat, not the upholstery. I like this type of safety features. I want this type of speaker system. I want this kind of security features, whatever, right? This type of rims, this type of etc. You want it custom. You want it the way you want it, right? You want it what does Burger King say? You want it your way, okay? So when I want it my way, the customer, when I want it my way, I call up the manufacturer. I go online to the website and I build my car. I tell them this is what I want, this way I want it. Okay. When the company receives that, it's called a job order. It's a customer's order that needs to be fulfilled. It's specific to the customer, which means it is a job. That's why the name is called job order. So in order for us to fulfill the customer's order, we need to acquire some raw materials. We got to get our work in process ready to go, our assembly line, so we can fulfill the customer's order. So that's how I want you to think about this process. I can show you how it all works, it all comes together. Every customer order starts with what we call a job cost sheet. And it is quite simply a form that includes a category for direct materials, a category for direct labor, and a category for overhead. Okay? Think of them as columns on an Excel spreadsheet. Column for direct materials, column for direct labor, column for factory overhead. That's a job order cost sheet. It has a unique identifying number, customer information, where it's going, and exactly how many quantity of each raw materials I need, how long it's going to take, the time tickets from the employees working on the job, and then an applied rate for overhead. That's a job order cost sheet. Every job has a job order cost sheet related to it. So that's the next thing we're going to talk about. Before I jump into that process, I also want to talk about this difference. Today we're talking about job order costing. In job order costing, it's based off of a customer specific order. That's why we call it a job order. Typically, these are used in companies that have diverse products and services. The companies have low production volume, meaning they don't make a whole lot at a time. Okay? There's high product flexibility, customization. That's what that means. Customers can customize what they want. And there's low standardization, meaning I have a shell and I can modify it as I see fit. When I think about these things, I think about a company like Tesla or Toyota or some type of company where you can order something that's specific to your needs. Some of you might be into like ordering custom shoes, okay, or custom clothes, or things like that. Those types of businesses that sell those kind of things use a job order cost system. So that's job order costing. Next week, we're going to talk about this other cost system called process costing. In process costing, it's repetitive. It's the same product over and over and over again. It's high production volume, high standardization, and very low product flexibility. It's pretty much the exact opposite of job order costing. With process order costing, we're going to talk about next week, it's a continuous process. That's why we call it a process costing. And the example I usually give when we talk about process costing is a company like General Motors or Ford or Dasani Water, Coca-Cola, Pepsi-Cola. Any type of grocery manufacturing. Go to the grocery store, you see that same stuff on the shelf every single time you're there? That's process costing. They make the same thing over and over again, millions of them, every day. And they keep pumping it out, regardless of who's ordering it. That's called process costing. And we're going to talk about that next week. So for today, let's focus on job order costing. Custom orders, diverse products and services, low production volume, high product flexibility, and low standardization. So, just as we just talked about last week, there are three major components that go into manufacturing a product. There's the direct materials, there's direct labor, and factory overhead. These three primary components go into manufacturing any product. In job order costing, all three of these things are tracked based on the job, the individual customer order. So everything starts with direct materials. I take my direct materials, I put it onto my job order cost sheet for this particular job that I'm working on. It goes through the manufacturing process down the assembly line. I'm adding in direct labor as my employees are working on building this vehicle or whatever. And then I'm also adding in overhead based off of the amount of time it takes to complete this job. Overhead, as you know, includes things like indirect materials, indirect labor, and other costs. So each job order cost sheet has these three things totaled up. And then as the work is being completed, it moves off of the assembly line, out of work in process, and into what we call finished goods inventory. And then when we sell it, it moves off of our balance sheet and onto our income statement as cost of goods sold. Just as a reminder, I don't know if we talked about this last week, but there are three types of inventory on your balance sheet, right? We have raw materials inventory, that's the raw materials, right? We have work in process inventory, that's the stuff that we're in the process of building, okay, on the assembly line. And we also have finished goods inventory. This is where we finished the product and it's available for sale. Once that product is sold, it comes off of our balance sheet as finished goods inventory and onto our income statement as cost of goods sold. See, obviously there's revenue involved with the sale. So revenue minus cost of goods sold equals gross profit. You know that. But that's the process. So just keep that in mind. So let's talk more about this job order cost sheet business. Here we have three different vehicles that are in the process of being manufactured. There are three different jobs. They're individual customer orders. So each job is going to have its own direct materials, its own direct labor, and its own factory overhead on the job order cost sheet. It's really important when we talk about cost to understand the physical flow of manufacturing as the costs are being added in. The raw materials, that's our raw materials. Going back to the calculator example. Calculator example, my raw materials are plastic, rubber, and components. Okay, those are all my raw materials. Those are my direct materials. Direct materials are materials that make up the majority of the cost of the product. Direct materials make up the majority of the cost of the materials in the product. Okay? That's direct materials. We also might have some indirect materials. Indirect materials are very minute in comparison to the majority of the cost of the product. Indirect materials might include things like adhesive, which is also known as glue. Okay? That might include very small components that are so insignificant that it doesn't really make a difference. Okay? Those are indirect materials. The difference here is that with direct materials, I can trace those to the manufacturing of the product. Indirect materials, I cannot. So indirect materials is actually classified as overhead. Indirect materials is classified as overhead. Okay? So that's raw materials. We take it out of raw materials, we go to our bins to get our plastic, our rubber, our components, and we put it into what we call work in process. This is the assembly line. This is where my employees are directly working on making the product, you see. That's where the term direct labor comes from. Employees are directly working on making the product. Okay, so in work in process, I'm adding in the cost of direct labor. I'm also adding in my manufacturing overhead. And remember, manufacturing overhead includes things that I cannot directly trace to the product, but are a part of the manufacturing process. That would include things like rent for the facility, the supervisor's salary, indirect materials, maintenance, and etc. Indirect. Once all those are added in, plus the materials, plus the labor, then it rolls off the assembly line and it becomes finished goods. When it becomes finished goods inventory, that means that the product is completed and available for sale. Completed and available for sale, that's finished goods. This calculator was just manufactured. I put it in its package and I put it on the shelf or in the box ready to be shipped. It is finished goods. Okay? When the company sells the finished goods to its customers, whether it be another business or whether it be direct to consumer, it comes out of finished goods inventory and goes onto the income statement as cost of goods sold. It's the cost of the good at which they were sold at. In other words, it's the total cost of making the product. So that's the physical flow. Connecting the physical flow in your mind to the cost will help you. It will help you to understand this process. It'll help you for the rest of the course, actually. So something to keep in mind. Here we have an example of a job order cost sheet. Earlier, I had mentioned that the job order cost sheet has three categories. It has direct materials, direct labor, and factory overhead. On the direct materials side, what you would normally see is a list of all of the materials used for this job. You'll notice that that category has within it has a column called requisition. You might be wondering, Dr. B, what is requisition? What does that mean? I want you to think about the physical flow. When I need raw materials to start a job, to put it in a work in process, I need to complete what's called a requisition form. So here I am on the assembly line, and I need raw materials to start this job. What do? I complete what's called a requisition form. The requisition form lists out the quantity, the raw materials, and the cost. And we do that for each type of raw material. Fill out the requisition form. Requisition form goes to the raw materials manager. And then someone from raw materials brings the raw materials to work in process. That's why we call it a requisition form. So under direct materials, I have the date, the requisition form number, and the cost. And I'll do that for each requisition that I need for this particular job. Then here I am on the assembly line. I have employees working on the assembly line to build these products, right? So how do I know how much to charge for direct labor for this job? Well, it works like this. I have employees. I might have more than one employee working on that same job. In order for me to track the amount of time that each employee spends on that job, I have what we call time tickets. Time tickets. A time ticket tracks when the employee started working on that job, when they stopped for a break, when they started again, and then when they stopped again. Okay, and I do that for each employee working on that particular job. What it does is kind of like a time study. What it does is I'm tracking the exact amount of time that each employee is spending on that particular job. So that way I can bill the customer the correct cost. And the way I do that is I take each employee's hourly wage and multiply that by the amount of time that they spent on that job to get my total cost per employee. And I add them all up to get the total cost of direct labor. So that's why in this middle category here under direct labor, you see time ticket. That's what a time ticket is. And lastly, on the job order cost sheet on the right side, we have overhead. You'll notice a couple of things here, particularly. The rate. The rate is oftentimes calculated based off of what the management decides is adequate enough to cover the overhead for the manufacturing process. And it's based on a couple of different factors. And there's a few ways to do this, to calculate the overhead rate. Companies do is they use what's called a single plant-wide rate method. Single plant-wide rate method. The single plant-wide rate method is very simply a percentage of an activity base. An activity base is usually something like direct labor. Okay, it's the base of the activity to perform the job. Okay, in this example, the company is using direct labor as its activity base. And to find the single plant-wide rate method, the company is saying that direct overhead is 160% of the direct labor cost. Okay? It's an estimate. It's an estimate. Finding a single plant-wide rate method, it's an estimate. And we estimate that it's 160% of direct labor. That's how we got the percentage. So the way we calculate overhead is we take 160% of the total direct labor. In this case, it's 160% of $1,000, which is $1,600. On the very bottom of the job order cost sheet, we have our total direct materials, total direct labor, and total factory overhead. We add them all together to get the total cost of the job. So this is an example of a job order cost sheet. So again, think about the physical flow. It helps us to track the costs accordingly. I want you to think about how direct materials gets to the company in the first place. So remember the manufacturing of my calculator. I have plastic, rubber, and components. Think about that for a second. How did we get the plastic, rubber, and components? I'm just a manufacturer. I don't make the raw materials. I buy them from somewhere. I buy them from my vendors. I got a vendor for plastic. I got a vendor for rubber, and I got a vendor for components. And so I need to purchase that. Right? I need to purchase my raw materials. So what I do, I complete a think about this for a second. I complete an invoice, also known as a purchase order. I put my purchase order out. I give my purchase order to my vendor. I say, hey, this is the quantity I need. This is the quantity, and this is the type of inventory I need from you. So I send the purchase order to the vendor. The vendor then sends me what I ordered, hopefully. And in that order, there's going to be a packing slip. And it's going to tell me the quantity and the quality and of course, the price. I take that packing slip, I attach it to the copy of my purchase order, I enter it into my system. When I receive that raw materials, it comes with what we call a receiving report. Okay, I verify what's in the box matches what I ordered, and I enter that into my material ledger cards. The material ledger card shows us the amount of materials we received from our vendor. Okay, it also shows us the amount of the materials we issued to work in process, that we sent over to work in process, based off of the requisitions. And we update the balances of the inventories accordingly. That makes sense? Ty, did you have a question? Or are we good?
No, my apologies.
Hey, no worries. I just want to make sure, I'm here to help. So I just want to make sure. All right, cool. So receiving reports help us to update the amount of materials received from our vendors. The material ledger cards account for the materials we received, minus any materials we issued to work in process, equals the balance. And we keep updating that accordingly based off of our purchases of raw materials and the use of those raw materials. We do that for each type of material. Based off of the requisition forms, I can update my material ledger card, and I also update my job order cost sheets. Materials, yeah. So that is the physical flow. It matches the physical flow. So this is an example of a material ledger card. Here we have component. We have a component alarm system, we'll say. We have, let's see here. We started the month with 1 unit in inventory. We purchased from our vendor an additional 2 units on March 4, for a total of 1,200. We issued 1 unit to our based off a requisition number that we received from work in process for a particular job. And so you can see that the balance is updating based off of what we received minus what was issued. And it continuously updates. And we see here at the top, we have a journal entry. This journal entry represents the purchases of the raw materials. So we debit raw materials inventory and credit accounts payable because we purchased it on account. We haven't paid that bill yet. This is an example of the requisition form I was talking about earlier. So when our people on the assembly line and work in process, when they need raw materials, they complete this requisition form. You'll notice that the requisition form has the part number, the description of the part, how many units of each part is needed, and then there's a total at the end. Very simple form. The reason why it's important is because this requisition gets tracked for both the material ledgers and the job order cost sheet. Think of it like the connection between the two. Yeah. And we can see that connection based off of this journal entry. So, as you know, at the end of each month or during the month, I need to make adjusting journal entries to to show the movement of my inventory from one area to another. So when work in process requisitions raw materials, I need to show the movement of the cost of that inventory out of raw materials inventory and into work in process inventory. And the way I do that is I take the total of all of the direct materials that have been requisitioned and I make an adjusting entry. I debit work in process inventory What that does is it increases the balance of work in process. You see, work in process inventory. Inventory is an asset account. To increase an asset account, I debit it. So I'm debiting work in process inventory to raise the balance of my work in process. And I'm crediting raw materials inventory to reduce the balance of raw materials. Because I took it out of raw materials and put it into work in process. And I represented that through this adjusting entry. Remember, think about the physical flow. The physical flow will help you. So what about labor? So we talked about raw materials. What about the labor part? So here I am in work in process, and I got employees working on the assembly line for this calculator, okay? And so I need to understand the exact amount of time that each employee is taking on making this calculator. How do I do that? I use what's called time tickets. Think of a stopwatch. You click start, you start the job. You click stop when you stop. That's a time ticket. It shows me the exact amount of time that you spent working on that particular job. Start, stop, and I add all that time up. I multiply that by the hourly wage in order to find the direct labor for that particular job that you spent working on. And I do that for every employee, for every job. And I add those to my job order cost sheets under labor. It's that simple, right? And then for my other employees who are indirect, my indirect labor, that would be my supervisor's salaries, etc. That's indirect labor. That goes to my indirect labor for factory overhead ledger. This is an example of a job order cost sheet. Here we have a couple of different time tickets. Here's my employee, one of my employees for this particular job. And you can see I'm tracking the start and end times for each day that this employee worked on this specific job. Okay, and oftentimes it's more than one employee. So I take the hourly rate times the amount of hours worked to get the amount for each day, add them all up. I do that for each employee for each job. Now, how do I add that cost into work in process? I make an adjusting entry. I take the total amount of labor for all the jobs, and I debit work in process inventory to increase the cost of work in process inventory. I'm adding in the direct labor. And then I credit factory wages payable because I need to pay my employees at some point in the future. But you see how that works. So we talked about raw materials. We talked about work in process. And in the work in process, we have the materials we use. We added in the direct labor. Now let's add in our overhead. So factory overhead, as I had mentioned, can be calculated in a couple of different ways. One of the most common ways is applying what we call the single plant-wide rate method. The single plant-wide rate method is also known as the predetermined overhead rate. The idea here is that I'm using what's called an activity base in order to find my overhead rate. In this example, we're using the amount of direct labor as my activity base. Okay, the amount of hours or whatever used. That's my activity base. So we do this in 4 steps. The first thing we do is we set the predetermined overhead rate. And the way we do that is we take the estimated overhead costs, total estimated overhead costs for the year divided by the estimated activity. The estimated activity in this case would be the total number of direct labor hours for the year. Okay, so total overhead costs estimated divided by estimated total direct labor hours for the year. That will give me my predetermined overhead rate. I then take that predetermined overhead rate to find the applied estimated overhead. So I take the overhead rate times the actual amount of the activity base used. The actual amount of activity base used might be different, will probably be different than your estimated activity. So if I estimate I'm going to use 40,000 direct labor hours for the year, I might only use 38,000. Right? So I take the overhead rate times the actual amount used to find the applied overhead rate. And then I record the actual overhead. Now at the end, there's probably going to be a difference, right? I have an estimate and I have an actual. There's going to be a difference at the end of the year, right? My estimate's usually close. It's usually not like odd in the penny, right? My estimate's usually close, but it's not going to be the actual used. I estimated 40,000 hours. I actually used 38,000. Okay, so there's a difference here. So I need to adjust the actual overhead rate to my cost of goods sold in order to balance my book. So first we set the predetermined overhead rate, also known as the single plant-wide rate method. And in this example, we're doing it based off of the total labor cost, and we're applying it to the overhead for the job. So we take the estimated overhead cost divided by the estimated activity base. In this example, we're estimating that our total overhead is going to be 200,000 for the year, and that our total activity base, which is the total cost of direct labor, is 125,000. That gives us 160%, or 1.6. So we take that 1.6 and we multiply that to the 1.6 and we multiply that to the direct labor to find the total overhead applied rate. So in order for us to add in the overhead cost in the work in process to the job order cost sheet, we debit work in process inventory to yet again increase the work in process inventory cost. And we credit factory overhead. That shows us how we're applying those costs. And of course, as you know, throughout the year, we record our actual overhead, our actual total of indirect materials, our actual indirect labor, our actual rent, our actual, etc. Yeah. And at the end of each month, I need to record my actual overhead used. And I do it for each category. This example, I'm recording indirect materials that I actually used. So I'm going to debit factory overhead for the actual amount used. And I'm going to credit raw materials inventory. Because remember, it's indirect materials. Indirect labor. I'm going to debit factory overhead, and I'm going to credit factory wages payable for the amount of actual indirect labor used. And then I'm going to do it for all of my other factory overhead, debit factory overhead, and credit. Things like accumulated depreciation, rent, utilities, prepaid insurance. These are the actual overhead costs. And then I get, at the end of the month, I get a total of actual factory overhead. And I compare that to my estimated factory overhead. And I need to adjust for the over or under amount. Think about the physical flow. Physical flow is your friend. I like this slide because it shows a nice representation of the actual overhead as it flows through. And it's the same with this. It shows you the physical flow of the cost. So we started with the purchase of direct materials. Then we started using some of those direct materials through requisition, went into work in process. And then step 3, we started applying direct labor. Step 4, we took some indirect material. Step 5, we took some additional indirect labor. Step 6, we took our total factory overhead and applied it to our work in process inventory. Step 7, we took our other accounts and applied that to factory overhead. Step 8, step 7 is really like the actual amount used. Step 8, we took our total work in process inventory and transferred it to finished goods inventory. Remember, finished goods is ready and available for sale. Step 9, I started selling some of that finished goods inventory. So it comes out of finished goods inventory and onto our income statement as cost of goods sold. Well, that just shows you the physical flow. Physical flow. This is a summary of all of the adjusting entries I make in order to track the physical flow of those costs. And we already talked about these, but this just kind of shows you a summary of those things. Actually, I don't think we talked about 8, 9, and 10. Cost, transaction 8, finished goods inventory, and then transferred into finished goods inventory out of work in process. That's to record the completion of 2 different jobs. And then when we sold one of the jobs or finished one of the jobs and sold it to the customer, we debit cost of goods sold and credit finished goods inventory for that particular total cost of that job. And then we sell it. We sold it to the customer. So we debit accounts receivable and credit sales. It just kind of shows you, right, how to record the physical flow. Now, a lot of this, we use what's called a schedule of the cost of goods manufactured. The schedule of the cost of goods manufactured shows us the total of direct materials used, the amount of direct labor used, and the applied factory overhead. That gives us the total cost of manufacturing. Then we add in any beginning work in process inventory to get the total cost of work in process. And then we subtract out the ending work in process inventory balance to equal the total cost of goods manufactured. This is a direct way for you to calculate the amount of manufacturing cost you have for a particular month. From that statement, cost of goods manufactured, we can then compute our financial statements. So we have here our income statement: sales minus cost of goods sold equals gross profit, minus selling and general administrative expenses equals net income. And you can see on the right side our balance sheet. As you know, the balance sheet shows assets, liabilities, and equity. Under our assets, our current assets for inventory, we have raw materials inventory, work in process inventory, and finished goods inventory. Now, from all of that information, from the estimate overhead, and then throughout the month we get in our actual overhead amounts, there's gonna be a difference. I'm either gonna be over or I'm gonna be under on my estimate. So I need to make an adjusting entry in order to correct that estimate. And so it's going to be one of two entries based off of what happened. If the actual overhead is greater than the estimate or the applied, then that means overhead has been underapplied and the jobs have been undercosted. So I need to make an adjusting entry. I'm going to increase my cost of goods sold by debiting cost of goods sold, and I'm going to increase my factory overhead by crediting factory overhead. That's how I make the adjusting entry, you see? If my actual factory overhead is less than my estimate, my applied, that means I overestimated factory overhead, overapplied it, and the jobs are over cost. So I need to reduce that. I need to reduce the cost. So I debit factory overhead to reduce factory overhead, and I credit cost of goods sold to reduce cost of goods sold. See? And that's how we adjust factory overhead to make it the estimate aligned with the actual overhead. So when there's a difference, we adjust for that difference. That's what this shows us. You can apply this concept of job order costing to service businesses as well. I know for a fact in the hotel business that we use job order costing for things like weddings. With a wedding, you know that there's going to be certain things going on. For example, there's the rental of the facility. There is catering. There is other aspects, right? And so we can use a job order cost sheet in order to apply the cost of the wedding. So very commonly in the hotel business, what we would normally do is we have direct labor, our employees of the hotel, right? And we also have overhead of the hotel. We don't have direct materials, okay? We're not using materials for a wedding, right? We're using services and we're using overhead. The overhead would include things like the food and beverage, etc. So in the hotel, we would apply direct labor and overhead to the job order cost sheet of the wedding. You see what I'm saying? So the point that I'm trying to make here is that job order costing can also be used in a service business like hospitality. We can also use job order costing when it comes to pricing our services. One of the biggest challenges that business owners face is understanding how much to charge your customer, right? Especially in a service business. It's difficult to figure that out, right? To be very honest, it is difficult to accurately price your services. And the way we would want to do that is by using a job order cost sheet. And in that, we take into consideration the direct labor, the cost of labor, right? So the number of hours we expect to work on this particular job times the hourly rate. And I do that for all of my employees to get my total direct labor. And then I apply my overhead rate. In this case, the overhead rate is single plant-wide rate method of $108 per labor hour. Okay. And that will give me my total estimated job cost. Once I have my total estimated job cost, I can then price the job accordingly. I can say, hey, this is how much it's going to cost, and then, from there we figure out how much we're going to charge our customer. Because in business, as you know, you have to be able to cover all of your costs in order to make a profit. And one way that we can figure, are we going to cover all of our costs and make a profit, is by calculating what we call the gross profit ratio. And for a service company, we do that by taking the revenue minus the cost of the service divided by the revenue. And that will give me my gross profit ratio for the service that we're offering. And you can do this for something like a wedding, for example, in the hospitality business. And that, my friends, is the end of our discussion today on job order costing. Are there any questions, comments, or concerns about job order costing that I could help to answer at this time? Brain is fried. Leland, yeah, mine too. That comes with time, my friend.
Yeah, don't worry. I'm gonna be listening to the recordings. This is the first subject that got my brain fried. So I'm gonna definitely look at the recordings.
Yeah, it happens, And Leland, one thing I recommend that I find helpful is that as you're going through the quiz and through the discussion board, have the PowerPoint presentation open, have your notes open, listen to the recording. Yeah, all of those things.
Yeah, that's how I do it. I usually have a recording up, and then I'm typing some stuff, and then I look up Google job order costing. I got a lot of information tabs up right now, so I'm good.
Right, yeah. No, that's a good method. That's usually what I do when I study a subject that maybe I don't understand as much, or something I want to understand more. I'll do that type of thing as well. Having, and of course the book too is good. There are some really good example problems and exercises in there that I think are helpful. And then the other one that I also recommend is when you go into the classroom, these Excel exercises can be also very helpful. So here we have job costing in Excel. And you could download this and open it up if you want, or whatever you find easiest. But these example problems I find to be very helpful, especially when I need to practice. Because as you all know, accounting is a practice, and the way that we learn how to do accounting is by practicing it. And so these types of Excel exercises I find to be helpful. Which is why I put them in the classroom in the first place, just because I learn best by trying it myself, right? And so that's why I find those to be somewhat helpful. But yeah, great points. So Darius, I see your hand.
Yeah, I was looking. I'm going through talking about the slide before the last. So to determine the overhead costs, you do the what's the formula for that again?
Yeah, yeah. Let me run through overhead costs one more time for you. And I'm sure this will probably help your classmates as well. So let me go back to that area. Okay, here we go. So I had mentioned that some businesses they use what's called a single plant-wide rate method for setting their overhead cost. And that's what this one is here. We take the estimated overhead cost divided by the estimated activity base. So essentially what we're doing is we're saying, hey, this is the amount of overhead I expect to use for this month or for this year. And I divide that by the amount of direct labor I expect that I'm going to require for that month or for that year. And so total overhead, estimated overhead divided by total direct labor, that's going to get me my percentage. And I'm sorry, 1.6. And then we take that percentage and we multiply that by the actual direct labor on the job. And that will give me my total applied overhead. And then once I know my total applied overhead, then I can, throughout the month, I'm going to get the actual overhead in. And so what I'll do at the end of each month is I'll make an adjusting entry in order to get my estimate to be actual, if that makes sense. Does that help at all, Darius?
Yes, it makes sense. Yes.
Awesome, cool, very good, great, good question. And then D, you kind of get it because you work in retail. Yeah, the inventory, exactly. It really makes you think, D, also like about how and why things are priced at the way that they are, right? That's one thing that I think about after a chapter like this, and after kind of understanding the cost of manufacturing, you really get to understand why retailers price things the way that they do. It kind of comes full circle. Great comments. Awesome. Any other questions about job costing? Oh, good. Okay. As a reminder, yeah, exactly. Yeah, it's fun. I think it's fun. So, as a reminder for this week, please, by Thursday night, if you could do your original discussion board post, that would be awesome. I see a couple of responses in here already. This is exactly what I'm looking for. By Thursday night, I'd love for you to have a post like what Lena has or what now Lisa has here. Have your original post done by Thursday night, and then respond to 2 of your classmates by Sunday. That's definitely what I'd love to see happen. Yeah, and then you also have your quiz for this chapter on job order costing, and those are your 2 action items for this week. Are there any other comments, questions, or concerns that I can help to answer at this time about anything?
No, Professor.
Awesome. Cool. Thanks, Leland. Great. Well, thank you all so much for your time today. I really do appreciate all of you. I appreciate your hard work. Let's keep it up. We're 25% complete with the course. We're on our way. Let's keep this positive momentum. If you have late work, let's get it complete. And let's keep pushing forward. That's what we do best. So thank you again. Appreciate all of you. Have a wonderful rest of your night. Thank you so much. Take care.
All right,
Bye-bye.
Professor. See
Thank
you next
you.
week.
See you.
Thank you, Professor.
Thank you.